Hello, hi. This is Adil bringing you a review of the US markets for weekend analysis. The 16th of August going into Monday, the 18th of August 2014, bringing you an intermarket analysis perspective of where these markets are going and obviously where they've what's happened during the week. Okay, so basically to sum it all up, basically the whole week has been dictated by geopolitics, literally. Initially, the markets had a short squeeze, which I expected, which I forecasted, for the markets to have a short squeeze higher based on obviously the de-escalation, and that's exactly what happened. Mr. Putin stated that he was going to send in aid convoys to help out or base it on a humanitarian decision. Okay, and that was a pretext of him obviously to invade, which obviously that's the case on Friday as his troops cross over the border. So it was a decoy. It was not more of a Trojan horse. It was more of a decoy. So the whole world's media attention had obviously focused on that, and basically he has allowed his troops to cross over the border. And obviously, as soon as we caught news, well, we had news of that on Friday afternoon, the market sold off quite viciously. So basically, the rhetoric increases again. It's so much for de-escalation with regards to the Ukraine crisis. Although on one hand he states he wants to de-escalate, on the other hand he's sending in troops. So, and as you can see here, oil price obviously rallied almost $2 based on that information. So that's basically what's occurring right now. So what happens going forward then? Okay, so economic data throughout the week. UK GDP was good. That came, I mean, the stronger GDP out of the UK on Friday. Although that does obviously increase talk of interest rate rises sooner rather than later. Although Mr. Carney did state that his focus on the wage inflation, just like Miss Yellen. Okay, so with regards to Miss Yellen and with regards to US monetary policy, inflation itself is starting to pick up, but not as they expect or as she expects. So overall, still dovish. The economic data did U.S. jobless rate did rise. The inflation data came out in line, not below or not above. So overall, from an economic data perspective, I mean, we can have a look at the calendar from the week that's just gone past. I mean, let's just take it day by day. I mean, you had Monday was nothing for the US, okay. Then obviously we've had Eurozone, which I'm going to discuss. Obviously, weak economic data there. Out of the US, nothing really of any importance. Okay, yes, we had Japan. Japan still remains weak, etc., etc. Chinese data obviously came in slightly in line, if not below. Okay, German data again on that day, and inflation data still remains weak. And advanced retail sales obviously weak. That's again, economic data was weak, so again allows obviously Miss Yellen to remain dovish. And other than that, we've not really had anything at all. FDI data out of China wasn't exactly spectacular, and obviously again the main focus has been Eurozone data really overall, and obviously the continuing US jobless claims obviously increased on the Thursday, and there wasn't nothing of any importance other than the obviously consumer confidence. That's it, the consumer confidence data. University of Michigan, that came out lower than expected. So overall, nothing really confirming the taper last week. So obviously that allowed US stocks to move higher based on that dovish stance by Miss Yellen, or confirming her dovish stance. And given the fact that the Israel and Hamas have agreed to a truce, and given the fact that Mr. Putin was claiming to opt for peace and a ceasefire in Ukraine and a de-escalation there, and obviously no more additional sanctions. So overall, weak Eurozone data, confirming obviously what we already know, especially post sanctions, Russian sanctions. So overall, nothing really that could propel the markets high to a significant extent, other than the fact that obviously yes, de-escalation, geopolitics subsiding, and Miss Yellen remaining dovish, and given the fact that her algos are quite busy and short squeezing everybody in sight. So overall, that was the backdrop, and given the fact that news headlines were dictating market prices and market movements. So where does that leave us now? Okay, so Friday we had one hell of a sell-off, impressive, very very impressive. but we regained everything back because the Nasdaq closed back at the highs. So how do we interpret that? Okay, let's have a look. Okay, how do we interpret that? So from our Nasdaq, let's just start with the Nasdaq, because for my intermarket analysis, the way in which I operate and I teach, Nasdaq is the key. Okay, semicons and the biotechs obviously confirm the Nasdaq and support the movement there. Now that candle on the Nasdaq is very bearish. Well, not very bearish, but basically it's an early indication of exhaustion. Okay, and a potential top in the Nasdaq, especially with it being a double top resistance. Okay, so the HNS formation failed. Okay, so given the fact that we've had the Russian sanctions, and that's obviously going to hurt economic growth going forward, given the fact that Chinese data wasn't exactly spectacular, given the fact that we've had Israel, Hamas, and we've got the war in Iraq again now, US has gone back into Iraq, and God knows what that will happen, because we've already had one of the ISIS fanatics state that they want to attack America. God forbid. Let's hope that doesn't happen. Let's pray that doesn't happen. And so these imbeciles and these morons, obviously, somebody needs to stop them. So if America goes in, that's good. From my perspective, I think they should crush those arseholes and wipe them out. But just make sure you do that in the most efficient manner, so you don't hurt women and children who are innocent. Okay, so, but with regards to that, obviously ISIS certainly needs to be destroyed. That's my perspective, because they're fanatics. Okay, I am a Muslim myself, and I understand the concept of the Wahhabi movement. The Wahhabi movement is a fanatical movement. It's a branch. It's an externally created branch. It's done intentionally to destroy the core of the religion of Islam. If you look at the Lawrence of Arabia, look at the stories of Hemper the spy. This was all done by the Saudi Arabia, or it's not even Saudi Arabia, but the Saudi Arabians, the current obviously individuals that are in Saudi Arabia. It was a Najdi family. If you search Najdi and you look at the history of the Najdi family, you'll find that these were people that were foretold that were going to create a lot of strife and a lot of trouble for the world. They would find oil, which they did, and they'd use that money obviously then to pump and promote and obviously their ideology around the world, and that's what's polluting the world today. So all this fanatical ideologies, fanatical concept is and does originate from there, and these individuals certainly need to be crushed. And it's ironic now that it's the actual Saudi regime that's actually paying the Americans and telling the Americans to go in and wipe them out, because they're afraid of their own existence. So just like the Americans created the Taliban and Al-Qaeda in Afghanistan when they were fighting the Russians in the Cold War, and they left them, and eventually those same Frankensteins that they created, they educated, they taught. Donald Rumsfeld himself went there and taught them and educated them everything that they knew, etc., etc., to fight the Russians. Okay, those same Frankensteins turned against them. The same thing is happening to the Saudi regime. These idiots, these fanatics, these Wahhabi Najdites that they created are now, their own Frankenstein has now turned back on them. So you should always be be very, very careful. That's hence the saying, you should reap what you sow, and that's basically that couldn't be more prudent. Okay, couldn't be more pertinent. Okay, especially with the current environment right now. So you have to be very, very careful. Okay, so going back to the markets, I've obviously digressed there. Okay, so basically, yes, the war in Iraq, obviously that's a hindrance. That obviously itself is negative from a geopolitical standpoint. Okay, then given the fact that you got the Ukraine or the Cold War Part 2 standoff that everybody keeps dramatizing, that obviously is hurting America as well in terms of economically and obviously militarily as well, and politically as well. So any sort of uncertainty like that, obviously anything could escalate at any time. So it's very, very dangerous. Okay, so all those if you add all that in together, it's very hard for the Nasdaq to exceed the 75% fib, the 61% fib. I did not expect that to happen. Okay, I'll be the first to confirm that, especially when we had Cisco earnings that were forecasting emerging markets declining, and the weakness in emerging markets. So overall, obviously doesn't bode well especially with regards to the consumer not being as powerful, given the fact that retail sales are down, given that jobless claims are rising. So if that's the case, then who on earth is going to buy into technology? Nasdaq is very sensitive to disposable income. So if that income bracket is not there, wage price inflation isn't there, as Miss Yellen states, retail sales are not there, etc., etc., then who on earth is going to invest in technology, which is a highly growth sensitive region, or a highly disposable income dependent index? So again, that's the reason why it's very surprising for me. But I understand why that's the case, because the Nasdaq is how Miss Yellen or Mr. Bernanke would manipulate the stock market, because the Nasdaq dictates and moves the markets. Given the fact that it's very, like I said, disposable income sensitive, growth sensitive, then they realize that. So if they can short squeeze everybody out of that index, then it forces every other index to short squeeze higher as well. And their ultimate aim obviously is to increase asset prices, because they want to inflate the markets higher. Then obviously they'll stop at anything to do that, regardless of what the geopolitical situation, regardless of what the fundamentals are. They can't give a flying daggers. Okay, their whole aim is to inflate the stock market, and that's the only way you shore up balance sheets and bank balance sheets, etc., etc., and you help the consumer and to get back on his feet, and their 501ks, etc., etc. I can go into it much more detail, but for now, that's basically the concept and the thought process that I had. Okay, so I mean, forget everything else. Geopolitics alone, the Nasdaq should not have exceeded the 61% or the 75% fib, but it has. We have to deal with it. Okay, and let's see what's going to happen next. Okay, so let me just update my chart here. So 1 second. Right, okay, so basically the HNS has failed, so we get rid of the fib. Right shoulder obviously failed on this occasion, that's why we short squeezed higher. So a lot of this could be attributed to the short squeeze as well. So a lot of people may well have been short Nasdaq with a stop loss at 61 or 75%. Obviously that caught a lot of people off guard, which like it did me. And obviously created a short squeeze, and that's the reason why when the selling started on Friday, the selling was quite powerful, because the market was not higher based on organic strength or organic buyers. The market was higher because it was short squeezing everybody out of the market. So just think of it from that perspective. Okay, righty then. Okay, so excuse me. Okay, so basically, what do we have here? We have a hanging man candle. I mean, most of you that understand technical analysis will realize that when you have a long wick below, and that means that sellers obviously dominate the session until Miss Yellen's algos obviously came in and pumped the market back higher on light volume. So you have a hanging man candlestick on the Nasdaq. A hanging man plus double top resistance. What does that mean? Okay, it means the markets are going down. That's basically what it means. That's the easiest way of understanding it. So double top resistance with a hanging man candlestick. Now the gap has closed as well. That was the only catalyst really that was preventing the markets from selling off, and that only catalyst has now been closed. So bear that in mind as well. Okay, so hanging man plus double top. Double top, we drop, we go lower. Okay, so that's basically my interpretation. Now we can go to a 60-minute candle at the Nasdaq, and as you can see, I had this pattern here. The market moved higher. We had an unfilled gap. We had a beautiful diagonal trend line. Okay, we've got an unfilled gap below that must close. So all gaps must close eventually, and that's exactly what we're expecting on the Nasdaq. Okay, so there's your unfilled gap there. Okay, so let's just now that this gap is closed, we can get rid of this. Okay, and all we have now is horizontal resistance. So that's your ultimate resistance level is the one above, which is around the 39.97. So watch out for that. This move obviously is sell off here. I get rid of this diagonal trend line now because it's no longer valid. Okay, right, and that's basically where we find ourselves. So you have an unfilled gap below, so this 39.10 gap must close. This move here is just a bear flag formation, and down we go. That's basically what I'm expecting to happen come Monday. Okay, so I remain bearish on this, and obviously that's the biggest, just the biggest confirmation is obviously the larger time frame, which is the daily chart. Okay, so basically we had this channel. We eventually obviously we gapped higher. Miss Yellen's algos were obviously very busy, given the fact that we gapped higher. So where are we now? So basically you've got a gap here. That obviously gap closed. We went below. We went back and touched that support level. So basically what do we have here now? We have here, okay, let's just have a look and observe this. So this is the only trend line that we can draw right now. Okay, let's have a look. So you've got this key trend line that's coming up from above. You've got the unfilled gap on the 10-minute chart below. Yeah, we have, using our fib ratio, we're into the 75% fib resistance. So again, that means that we're going lower. That's resistance. So I'll be short Nasdaq come Monday, and that's basically the only conclusion that I can come until now. So obviously we've got this this channel should eventually break. Once it breaks, then down we go. Not a parallel channel, just a normal channel. There we go. So that's basically it. So once this channel breaks, down we go, and you're looking at support around the 39.50, but eventually we should hit the 39.40 come Monday next week. Okay, so this is your bear flag formation. Watch out for a break on the 10-minute candle down below. Okay, so watch out for 39.50, if not 39.40. And that's basically how I interpret the Nasdaq. So certainly bearish from my perspective into the 75% resistance on the 10-minute chart. Okay, so that's your Nasdaq. Let's get confirmation now with regards to that weakness. So look at your biotech. So biotech, we look at the biotech sector straight away. Daily chart, bang, into resistance. Okay, this horizontal resistance didn't hold. Obviously the market broke higher. Now the only thing that I need to keep an eye out for is this pattern here, right? So your left shoulder, head, your right shoulder, and then bang. Okay, so that's obviously not the case, unfortunately. That is not the case. Okay, but for now, let's just have a look at it from that perspective. So yep, daily chart is into resistance. Let's look at a 60-minute chart now. 60-minute chart, obviously we are coming back up to that resistance level up here. Nothing really from that region here. 10-minute chart obviously shows the intraday double top. So that obviously that's basically confirming the resistance there. So that's certainly the biotechs are into resistance. Let's have a look at the semicons. Semiconductors are into gap fill resistance, so into the 50 MA and gap fill resistance, so therefore down we go. That's the best way of interpreting this. We're into the 50 to 61% resistance, so down we go. Okay, so lower lows, lower highs, the 20 MA is below the 50 MA. This remains bearish. We've closed all the gaps now. There's no gaps left to fill, and down we go. Okay, so that's basically what we're interpreting and understanding for Monday's trading. So down we go. Okay, so we're into the 50-61%, down we go. Now we do have this key level up here, so you can certainly argue from a trading perspective previous support equals resistance, therefore down we go. And that's basically how we're reviewing that and understanding that. Okay, now with regards to the market, now that's the Nasdaq. So US market. So if the Nasdaq is bearish, then from my intermarket analysis perspective, the global markets, every market in the world is bearish from my perspective. Because when the Yanks sneeze, everybody else catches pneumonia, just like I've got flu at the moment. Right, so let's have a look at the rest of the markets now. Let's have a look at the US market. So let's go to the S&P 500. I've already put this out to everybody. The S&P 500 obviously has broken its bullish channel. Okay, is retesting previous support equals resistance. The unfilled gap remains at 1970. There's no catalyst yet to close that gap, especially with regards to sell-off on Friday. It's very hard. Now, okay, the 20 MA is below the 50 MA. Bearish momentum resides and is dominant. We've held a 61% fib. Again, that confirms resistance. And down we go. Okay, we've not made a higher high. This is your lower high. Down we go. Back to the 1904, possibly to 200 MA, if not hitting this key red trend line that's coming up from below. Okay, so that certainly needs to be touched. Okay, so that's basically what we're expecting come, especially with regards to the escalation over the weekend. I mean, there's headlines now coming out of the UK, US regarding, even though Mr. Obama's made a speech regarding Ukraine and Russia. So that's basically what we have to interpret and understand. Russia is poised with hundreds of aid trucks and 50,000 troops in Ukraine will be all To read Obama's sternest tweet, yeah, Russian aid convoy waits near Ukraine. Russia has condemned ISIL's terrorism and what about its own terrorism? Okay. So EU Council asks third countries not to replace European food on Russian market. Oops a daisy, okay. Oops a daisy. Okay, so the situation in Ukraine isn't... Situation in Ukraine is not getting better. I mean, some of these tweets that you can read, I mean, you can just do type in Ukraine, okay, type in Ukraine into your tweet deck and just look at some of the stuff that comes up. I mean, it's just a sentiment indicator really, and you can just see, I mean, everything points to war. I mean, there's nothing there that's anything about a truce or anything about military convoy, Ukraine military convoy mostly destroyed. I mean, Ukraine, we destroyed much of Russian military convoy, so Ukraine claims artillery destroyed much of a military convoy that crossed the Russian this week.
The convoy of Russian armored personnel carriers had just crossed into Ukraine, said witnesses and several journalists. When the Ukrainian military struck, shelling the convoy and partially destroying it. Moscow insisted no Russian military vehicles crossed the border at all.
Every Russian military column is constantly watched. We cannot destroy them right on the border. That is why we use tactics of letting these columns move deep into our territory and then destroy them there.
The military vehicles came in addition to a larger convoy, this long white line of trucks, which the Russian government has insisted is delivering only humanitarian aid. But when Ukrainian officials escorted journalists to inspect it, they found many of the trucks largely empty. And visible nearby, a large column of Russian tanks parked on the road, part of a massive Russian force now deployed within miles of the Ukrainian border. Today, the International Red Cross told CNN it is now negotiating an agreement with Moscow to arrange for the aid to be delivered after a thorough inspection, with the trucks that delivered it quickly returning to Russia.
They will be driven to Luhansk and unloaded in Luhansk. The trucks turn around and go straight back to Kamensk.
So that takes away the chance that other things can sneak their way into the country?
My assumption is that's exactly the reason, yes.
It's just, it's unbelievable. Honestly, this saga is going on, and the longer it goes on, it's going to make it worse for the stock market. It's been going on long enough, and like I said, it's a sentiment indicator. Type in Ukraine, and the tweets that are coming out of there certainly don't look good. Okay, so and obviously with regards to this Russian vehicle or military vehicle being attacked by Ukraine, I can't see Mr. Putin backing down at all. Okay, so that certainly isn't good. Okay, so Russian sanctions hurting economic prospects, and given the fact that they've declared war now with regards to Russia, this certainly does not bode well. Okay, so it does not bode well. Okay, so that's basically where we are. Okay, so we're into 61% and 75% resistance. Okay, and basically the S&P, obviously, given the fact that we've got headlines that we just read, it certainly doesn't bode well. Okay, now we look at the Russell. Okay, the Russell obviously confirms or reaffirms the bearishness with regards to the S&P 500, and lo and behold, what do you see? A H&S formation. We've obviously retested the neckline, we've broken down, and the target that we have for the H&S is 81. So obviously that doesn't bode well as well. So this coincides with the resistance on the S&P 500 and confirms it, just like the Nasdaq was confirmed by the biotechs and the semicons. Okay, folks. So I'm going to call it a day there, because I've got a cricket match today, even though I've got a flu and the weather doesn't look very spectacular in Manchester. I have a cricket match to get ready for as well, so I need to do a UK or FTSE or European video as well for the FTSE in Europe. So I'll call it risk on, risk off, wax on, wax off, and I think I'll close this video for now. Okay, folks, so good luck for next week's trading to all the US viewers.